dragon or dragon? What is it like investing in China? Brought to you by Affin Hwang Asset Management. This is Ken here, and I'll be your host today. Thank you for joining us this morning, and we hope that everyone is keeping safe and staying healthy. Before we start, do ensure that your Wi-Fi experience is stable for a better experience, or alternatively, you can also use your mobile phone data. If you have any questions to raise during the talk, feel free to leave your questions in the chat box, and we will address it during our Q&A session. We all know that China, being one of the earliest major economy to recover from this COVID-19 pandemic, actually, what else can our investors look out for in the Chinese market? To start off, let me briefly introduce our speaker for today. We have John, who joined Affin Hwang Asset Management in August 2017. John also has 4 years of experience in equities research prior to joining Affin Hwang Asset Management. He graduated with a Bachelor of Economics from University of Queensland, Australia, and is a Chartered Financial Analyst CFA holder. He is responsible for our strategy in China, and today he's going to share on the opportunities to look out for in the Chinese equity market. Over to you, John.
Good morning. Good morning, everyone that's online joining us this morning. Big thank you for you guys for taking this time out to have us sharing our thoughts on China with you today. It's a Saturday morning, it's a weekend morning, so it must have been a very serious investment for you to pick this time to be with us today. So before I start off the presentation today, just allow me to say a big thank you to all of you that have been supporting Affin Hwang Asset Management all along and have been allowing us to grow with you all these years. So today the topic is on China, and on the ground, most of the questions that we get gather on the ground will be that China has been growing very fast, and what else can they do, or what else can we expect from China? So can it continue to grow? Would it slow down? Would there be more hurdles, obstacles moving forward? And what should we expect if we put our money in China? Hence the title today, is it still a dragon or would it be a dragon for China? So that's what I'm going to touch on this morning. And hopefully by the end of the session, we'll all have some kind of different view or a strengthened investment thesis in all our minds when we decide whether to put money in China moving forward. So before we move on to the presentation, shall we just start off with a very brief ice break here? So I believe most of you will be able to access to the Q&A bar or the Q&A dialogue box. So when it comes to China, like what comes to your mind when we really talk about China? So if you don't mind, just quickly key in the first thing that comes to your mind when we talk about China. So we will have roughly some sense here. All right. Okay, we're seeing some flows in. All right. Nice. Okay, so thank you very much for your answers. Okay, thank you very much for your answers. At least right now, all of us will be setting our minds on China, right? So we can stay focused on China for the coming sort of 1 hour here. So most people would think of fast growth when it comes to China. Most people would think of an economy that transformed greatly in the past 10 to 20 years. So the fact is that, yes, China has grown tremendously fast in the past 10 to 20 years. So in front of you is a chart where it shows how fast China has grown, and it's definitely one of the fastest growing economy globally. So, but the question is really moving forward, what are we expecting? So for 2021 itself, most people will be expecting somewhere around 8.5 to 9% growth for China. Is that good? Is that bad? That's up for debates. But the thing is that this number is based on a very low base from 2020, which the economy has been impacted by the COVID pandemic. So what should we expect moving forward? China has an ambition. It has set a target to double its GDP by 2035, So with that figure, if we do some back calculation, the expectation would be that China will have to grow somewhere around 5.5 to 6% for the next 15 years. So some economists have put out a staggered kind of expectation or estimates moving forward. As you can see in the chart in front of you, the growth rate would definitely slow, given the sheer size of how big China economy is. But the question is really, when this growth slows down, does it mean that this is the end of China investing? Has all the exciting part, has all the interesting part passed, right? So today, I would like to suggest four key areas that we will be drilling into, where we think that the opportunities are interesting moving forward. Really, it's about China's consumption spending. It's about how the wealth of China mass population is growing, and also how the economy is transforming from a so-called old economy into a new digitalized economy. And of course, as most of us will be aware by now, that China has been in a tuck and tussle with the US on some technological issues. Hence, it will be an area where China will really speed up investment and look to be more self-sufficient. All right. So China retail market is growing very fast, and it's soon to be one of the largest consumer market globally. Okay, so what does this mean? So it means that the total amount being spent on retail sales in China is going to be one of the largest in the world. So many of us would have an impression that China has been growing via investments in railways, in building roads, in building bridges to nowhere. But the fact is that in the past about 5 to 10 years, the growth of China was really driven by consumption. Okay. And one of the key reasons why the retail market is able to grow that fast to that size is really because of urbanization, which is something that China takes very, very seriously. As you can see in front of you, China's urbanization rate is somewhere around 60%. I think that the last figure that they will see is about 60% by 2019. We do not have the 2020 figures yet, but this is the number is still low as compared to how urbanized the US is, but the growth rate for urbanization is really unbelievably fast. So that is really one of the key drivers for China's consumption. So because of urbanization, people that so-called stay in the more rural areas are also able to spend. Like we have seen a rise in a percentage of disposable income being spent on consumption. So urbanization plus more spending, this really gives rise to many companies in China where they are focusing on these markets, be it food, be it apparels, be it vehicles, you name it. But this trend has really spurred and grew quite a few good companies in China itself. Other than that, the rising middle class population is really another thing, that because of urbanization, a lot more value added jobs are created, a lot more opportunities are open. Hence, you can see in front of you, this is a study done by McKinsey by the year 2018 versus 8 years ago versus 2010. You can see that the number of upper aspirant people who are richer has grew about 10 times more, even in the middle here. All right. So the whole wealth population, the whole so-called relatively wealthy population has really just bounced up very quickly. And this growth is even more apparent in tier 3 and tier 4, which are the so-called lower tier cities in China that grew 38% from 2010 to 2018. So with larger urbanization, with a larger population of wealthy Chinese, this has really marked a very good position for Chinese consumption retailers in China. And most of us will probably realize that in recent 5 to 10 years, we see a lot more so-called good Chinese brands around us. Now, this is not a recommendation for specific stocks, but I believe that you guys will have probably heard a lot more about things like media, like Xiaomi, like Li-Ning around in the past 5 to 10 years as compared to 10 years ago. So one of the reasons is really because the market for them has grew so much. The kind of growth they have seen has really improved so much, and they are able to go globalize moving forward. So this is really an area that we will pay a lot of attention on. And this is also an area where Chinese government itself is paying a lot of attention on, grooming so-called local champions. The other part of the story is really about digitalization of the economy in China, especially post-pandemic. So the whole pandemic has actually forced many businesses, many enterprises in China to move online. And one of the key reasons why this can be made in such a short period of time is really the penetration of mobile internet users. Is estimated somewhere around 900 million. That's in excess of 900 million people who have access to mobile internet in China. So that is very, very penetrated, and that makes using internet services much easier in China. So we probably, most of us have also engaged in some kind of internet services like e-commerce, like we order things from Shopee, from Lazada. Even right now, after 2020, most of us have probably grew a habit of ordering food online as well. So we will be a lot more engaged in on YouTube, on Netflix, or Spotify. So these are really the services that are offered by internet companies. And moving forward, where would really be the growth? We see that online food delivery is still relatively low. It's not a low number here, but it's still relatively low. And you can see that online music, live streaming, all these things are still parts that are really growing moving forward. So 5G is really something not unheard of. I think for most of us, we have been hearing so much about 5G. Even in Malaysia itself, our government has launched this 5G program just not too long ago. 5G rollout is really something that excites many people, and China is one of the fastest and one of the most aggressive ones that is rolling out 5G services. Unfortunately, I can't get a heat map to show you how covered is China's 5G coverage yet. But from some kind of numbers that we can expect would be that how fast has 5G been deployed in China? In January alone, new smartphone retail sales. So the smartphones that are sold in China in January, in the month of January 2021 itself, 60 to 70% of it are 5G enabled. So 60 to 70% of phones are already prepared to engage in 5G. So moving forward, the use case of 5G is something that we will be monitoring very closely, and how 5G can really enable a lot more things that we might not be able to imagine today. So things that we have seen some kind of development, some kind of breakthrough recently includes things like autonomous driving. So we have heard a lot more about autonomous driving. We have heard a lot more about smart factories. We have heard a lot more about smart cities, including like securities, surveillance, and things like that. So it's really about like what can 5G enable. So that are those things that are really interesting. So for us, yes, 5G rollout would involve a lot of infrastructure build up, would involve a lot of base stations and things like that. But that's that. But moving forward, I think the more exciting part is what can 5G enable, and that is a very big market that probably we have only seen the tip of the iceberg here. On R&D side, China has not been one that invested a lot in R&D for various reasons. But in recent years, we really see China picked up in the R&D spending. So in the chart before you, you can see that China's growth in R&D spending has really been one of the fastest among the major economies. So there's still a gap between China versus the rest of the major economies here. But it's really about the intention and how fast are they pouring money into R&Ds. One of the example of technology gap that is more obvious to probably many of us, that we know how Huawei got sanctioned by the US. We have heard a lot about SMIC being sanctioned by the US. So what is it actually about? So these are really chip makers. In front of you, this is an example of the chip makers that are the leaders of the world that makes chips, IC chips, but be it in your laptops, be it in your phones. So the number here, for those that are not too familiar, the smaller the number means that the more compact the chips that one can make. So the smaller number means a more advanced technology. So TSMC, a Taiwan firm that makes most of the chips that we probably have known of today, is really far ahead together with Samsung for what they can make. SMIC, which is the so-called leader in China itself, is still pretty much stuck at somewhere 14 nanometer here. So as comparison, it seems like it is a very far distance for China to catch up. But the question really moving forward is, how much is China going to spend in order to catch up? So one thing about technology is that it's not everything can be bought by money. So yes, China has this ambition. China has the money, but can SMIC really catch up? That is a big question to follow up with. So what could this entail? So I think the more interesting part is really not how soon can SMIC succeed, but when money is being poured into companies like SMIC, you require a lot more equipment, you require a lot more testing activities, you require a lot more R&D expertise in order to spur this to catch up. So those parts are really the opportunities that we are eyeing on, right? Okay, so very quick updates on current markets. Okay, so these are charts that is taken as of market close 10th of March, which is the past Wednesday. So we this is not up to date, as we missed out Thursday and Friday. So for Hong Kong itself, Hang Seng Index and Hang Seng Chinese Company Enterprise Index returned about 6 and 3% respectively for the year. And for mainland market, Shanghai and Shenzhen market, both have already plummeted into the negative territory. So one of the questions that we got is really why did this happen, and what's happening on the ground? For I will address that when we come to bond yields later. But before that, let us just have a quick look at valuations. This is the PE chart. This is not the only thing that we should be concerned of, but this is one of the easiest for us to refer to when we come to valuations. Is that Hang Seng and HSI and HSCI both are trading at a relatively high valuations as compared to the historical pattern. But one thing that I would really like to highlight here is that in the middle of 2020, so somewhere here, if you can see my mouse moving, in the middle of 2020, Hang Seng indices, including Hang Seng Index and Hang Seng Chinese Enterprise Index, have made a massive change in their components. So previously, these indices are really very heavy in financials like banks, insurance, property developers. But since the second half of 2020, the composite of the members of the composite has changed to include a lot more internet companies. Hence, we see this very sharp move in valuations here in the late of 2020s. So the question is really, yes, it seems like we are far off the historical average, but is it really that expensive? Personally, I think that it's not very excessively expensive, given that the whole mix change in the index itself. For Shanghai and Shenzhen itself is trading a bit more moderate after the plummet. It's trading somewhere around the 10-year historical average. So when we look at Chinese market, two things that really form a big flow for the Hong Kong and and the Shanghai Shenzhen markets. And this is one of the reasons why the market fell so much in the second half of February. So in front of you, this is a chart of the southbound flow. So let me just take 2 minutes to explain what southbound is about. So most of us will understand that China, mainland China, has a capital control. So money couldn't flow in and out as freely as possible. So the thing about southbound flow is that uh, the stock exchanges in mainland and the stock exchange in Hong Kong has built up this platform where they can buy and sell stocks freely between them through this regime, through this platform called the Stock Connect. So money from mainland China flowing into Hong Kong is called southbound because Hong Kong is geographically positioned at the south of mainland China. And money from Hong Kong flowing into mainland, that's called northbound. All right. So southbound and northbound flows are the money being flown between these two markets and these two economies. So in the southbound flow chart in front of you, since the establishment of this platform in 2014, you can see this gray area, which shows the cumulative flows has really been a one-way traffic driving up, which means money from mainland China has really flown one direction to Hong Kong ever since this platform has been established. And particularly in late 2020 to early 2021, we see a very, very sharp rise in this red line here. So this means in late 2020 and early 2021, there's really a massive, massive amount of money that came from mainland China to Hong Kong. Why did this happen? So one of the key and major reasons is because mainland mutual funds are really selling the new funds like hotcakes. Like we are talking about a daily fundraising of somewhere 15 billion. So that kind of size is really massive and mammoth, and that drew when fund managers, mutual fund managers receive these funds being raised, they have to deploy it in the market somewhere, and because Hong Kong market was relatively cheaper than the mainland market, and also Hong Kong market has stocks that are not listed in the mainland market. With the likes of giants like Tencent, with the likes of giants like Xiaomi. So these are really stocks that drew interest of the mainland fund managers, hence the very, very big inflow of money into Hong Kong market. And this actually reversed after Chinese New Year. You can see this red line actually fell very sharply after Chinese New Year. So why is this the case? So most of us that have followed the global economy or even the things in the US will know that the 10-year bond rate has really increased in the US. The treasury yield has really increased somewhere from, we are talking about close to zero, probably a year ago. And we are looking at the latest one is somewhere around 1.6. So the fast pace of increase in the US treasury bond yield has reset valuations very quickly. And this has spooked global equity holders because previously, really everyone thought that interest rate will remain low for a very long time. Inflation is not to be seen. But after all kinds of stimulus being pumped into the economy post-pandemic, we are seeing signs that inflations are picking up, and we are seeing signs that the bond market is trying to price in the kind of a rise in inflation. So due to that, equity got sold off. So if you are not very familiar how yield rates impact equity prices, just allow me 2 minutes to give a very quick explanation here. So how does a fund manager price a stock or a company? So the very textbook, the very theoretical way is to forecast the cash flow that a company can generate in the future. And we try to discount those cash flows back to present day to get the value today. And the discount rate that we use involves something called risk-free rate. So that is a rate that we think that is risk-free. And typically, very typically, we adopt something called the US Treasury bond yield. Why? Because it is understood, or it is sort of accepted by the market that the US government is probably the one with the less risk globally. Hence, we sort of adopted that as the risk-free rate. So when treasury bond yield goes up, means in your calculation of arriving to fair value of a company, when you need to divide a number with something larger, your end result will become smaller, which means stock prices, value of companies should come down when your denominator go up. Hence, this has made a reset. This has caused a reset in valuations. So with that happen, and with a lot of profits to be taken off the table, we see this reverse here. Is it the same for northbound? Northbound has really been a little bit more stable as compared to southbound, because the money from Hong Kong moving into the mainland is it takes a little bit more, a relatively more cautious stance. So money in Hong Kong, it doesn't mean that just the money from Hong Kong people itself. So Hong Kong is an international financial hub. So money from all around the world that are parked in Hong Kong can access to the mainland market through this northbound platform. And you can see, yes, the cumulative flow has been a one-way direction as well. And people are getting more and more interested, more educated about the mainland market. Hence, monies are flowing into mainland market as well. But the magnitude that we are talking about is really different from southbound. So, in our last slide here, before we wrap up, I would like to highlight a few more potential challenges that we could be facing in the Chinese market. The first one is regulatory risk. By now, probably many of you have sort of heard things that happened to Ant Financials, Alibaba in recent newspapers. So that is one of the classic example that what could regulation do to a company. China is very uniquely still a very strong centralized controlled economy government. So when the government tries to implement certain kind of policies, they usually get its way. So companies that want to develop and prosper in China really have to be in tune, have to be in line with the interests of the central government. So this has really caused a few hiccups and a few friction during the development of different companies, including education sector, including healthcare sector, including even consumption sector. And right now, the one that is really in focus is the internet sector in China. So why is this happening now? Is really one. Chinese government is much more consolidated right now. The power of the Chinese central party is really much more consolidated right now. Secondly, is that during the very, very fast-paced growth, probably people are just very fixated about growing and not so much about the risk that comes with growth. But what we have touched on in the earlier slides would be that moving forward, the growth rate for China is really going to moderate moving forward. So what we want moving forward is not high growth, but quality growth. So that is really being emphasized by the central government for many times, that we want a quality growth and not just high growth. And with quality growth, we need to set boundaries. We need to mitigate potential risk. We need to make sure that this thing is sustainable and just not boom bust in 10 years. Hence, regulatory changes is something that we have to follow very closely. It's one of the most difficult things to follow in China, but it's one of the most important things to get right in China as well. Secondly, will be the potential changes in monetary policy. So China, as we mentioned at the beginning of the talk, China is one of the earliest major economy to recover from the COVID pandemic. And given that they have already recovered so much, is it still sensible for the government to pump in as much money as they would like to? Or would that be a change? And the fact is that in recent economic data since fourth quarter of 2020, we see some kind of slowdown in terms of monetary growth in the economy. So the M2 growth, money supply growth in China is still growing, but the growth rate, the incremental loosening is already taming down. So moving forward, is this going to tame down in a faster pace, or is it going to be a very moderate, controlled manner? We believe that the Chinese government is still very much active in their monetary policy, so they will be monitoring it day to day, month to month, and make a suitable adjustment. In their own words, they are not expecting a U-turn in policy, but they do think that some kind of adjustment to ensure ample liquidity will be sufficient for the economy as it stands right now. Thirdly, geopolitical risks. I think I do not need to emphasize more about this. We have seen what kind of damage when two countries come into a battle in different forms, like US and China, and China and probably Europe, Australia. We have seen so many headlines in the media, and really moving forward, what entails China? How can it make friends or enemies in the region? And I think personally, the one that is most dangerous in this part would be the relationship between China and Taiwan. It is something that is mentioned by the central government that it is a very top priority for them to unify China. And they do think that it is something that has to be achieved during the regime of President Xi. So we will see, we will continue to follow, but how will this pan out is really something that can swing the market greatly. And I don't think that markets today are really pricing in such risk, because to be honest, it's really hard to price this thing. And we don't know whether will it happen when 5 years, 10 years, it could be a very long time. But when it happens, the relationship between China and Taiwan could be something that that will really swing the market a lot. Okay, with that, I wrap up my presentation here. So I'll hand the time back to Ken. We'll probably take a look at the questions we have. Thank you very much.
Thank you, John. That's a very in-depth sharing by you. As our investor right now, will have definitely more clarity on the various investment opportunities in the Chinese market. Following that, let's start off with the submitted question first. Then, John, you will be answering the questions that were raised in the chat box just now. So the pre-collected question we have for first question is, how should we actually think about the risk by investing in China, especially Asia's market that is actually priced in renminbi? Over to you, John.
Understood. Thank you very much for that question. I think most people will have this fear, and I think rightly so, that when we put money in China, it feels a bit mysterious. It feels a bit less transparent, if you may. How do we do our research, and how do we make our investment in China? Allow me to just give some kind of explanation of how we do it. Previously, before the pandemic strikes, we would try to visit China 2 to 3 years a year, to meet up with the companies that we are interested in, that we invested in, to speak to fund managers on the ground, to speak to analysts on the ground as well, to get a clearer sense of on the ground feel and sentiment. Other than that, I think one of the not so good thing about China in the past is that there are really so many scandals that caught headlines. And the most recent one that probably people have in mind would be Luckin Coffee, that really exploded because of some financial scandals. The truth is, financial scandals are not just contained in China. I think many countries have cases that exploded in Germany, in Australia, in the US. So how do we mitigate this kind of risk? For us, Affin Hwang Asset Management, I think we have the luxury to engage in two vendors, two third-party vendors that are really specialized in financial forensics or forensic accounting, if you will. So what do these companies do? What do these vendors do? They help us as per requested, or they will shoot us certain findings that they have to highlight companies that shows traits of fraudulent activities or fraudulent acts that could potentially become a fraud or trying to do some kind of funny things with their accounting. So with this kind of services that we are able to engage on, it helps us to focus, it helps us to drill down, investigate in certain areas, in certain companies that could actually pose a higher risk for our investments. So I think that is one thing that is one way that how do we do it. In terms of renminbi, by making investments in China, in mainland China, we do have to take a view on the currency side. So if renminbi is going to strengthen, is renminbi going to weaken, that is something that we have to take into account when we make an investment decision. Give you an example of it. A few years back, Chinese developers, home builders in China, they have a lot of US denominated debts in their books. So when renminbi weakens, it becomes a double whammy for these companies. And when we invest in these companies, we need to know what's the impact. Hence, we make a decision whether to buy, sell, or hold. So, if you are talking about a fund level, I think Affin Hwang Asset Management does provide various products. Some are hedged, some are not hedged in terms of currencies. So for that, I think our very good salespersons will be able to help you to make a decision whether you want to invest in hedged funds or unhedged funds that you will take a little bit of currency risk here. Yep, back to you, Ken.
Thanks, John. The second question that we have collected, it's we know that the US Treasury bond movement have been pretty volatile in the past 2 weeks. So maybe you can give us a little bit of insights. What are your comments on the recent movement of the US Treasury?
Mm-hmm. Sure. I think I've touched on a little bit here on this just now, on why the movement in US Treasury bond yields would affect asset prices, or aka stock prices as we know it. So probably something else that I'll add on a little bit here is that the inflation itself is not bad. Inflation itself is not bad. But when inflation rises too much, too fast, that would be a problem for the market. So what we really hope to see is that, yes, we are expecting some sort of inflation. Look, we are looking at huge stimulus in the US. Just overnight, we see that how the Biden administration has just passed 1.9 trillion of stimulus in the US. And to give you a perspective, that's close to 10% of the US GDP. Okay, so there is some sort of inflation expectation there. But the problem is really, is this a one-off, or is this going to normalize after this stimulus effect fades off? So that is really the key questions that we have right now. For now, I think we are not too worried about rising interest rate. We are not too worried about the Federal Reserve to increase interest rate. We think that the Fed chairman, Jerome Powell, has also indicates that he is willing to wait a little bit more. So that would be something that we'll be monitoring very closely. So where would this bond yield stop? Where will this bond yield, will this continue to rise? It's really something that is really the million-dollar question right here. Yeah.
All right, thanks, John. So moving on, we will answer the questions that were raised in the chat box. And most of these questions are pretty much related to the MPC meeting that has just ended, as our Chinese Premier Li Keqiang actually pledged at the MPC that they will actually expand the oversight of financial technology. So the question that it was raised just now in the chat box is, the recent month and weeks has seen the Chinese state regulators tightening controls on the fintech giants. So what are the implications on the bigger names such as Alibaba, Tencent, Baidu? Do you actually foresee the spin-off into smaller outfit and those smaller companies with obviously smaller market caps as well? Over to you, John.
Sure. Thank you for that question. It's really a very professional question here. I think many of us have this issue and trouble to understand what is China actually trying to do with these companies. So the whole issue actually really exploded when Ant IPO was called off just one day before the actual listing day. And many people question why. And some are pinpointing to specific individuals, some are pinpointing to other risks. To be honest, we were quite surprised by it as well. Like we really thought that the IPO would be a successful one. We were very keen to participate in it as well. Um, Reasons being is because for an IPO to be listed in both Shanghai and Hong Kong has to go through um, we have to have the blessings from policymakers in both sides, either in Hong Kong or in mainland China. So the fact that they are allowed to list is already a very plus point. But that being said, we have always known that regulation is the biggest challenge for such companies, because they are really touching the nerves of the economy. We're talking about financial institutions, not just banks, not just lenders. We're talking about insurance. We're talking about asset management products, funds flows as well. So when this thing was brought into the spotlight, what is really the main the main problem here? Um, give you a perspective to give you a perspective. Chinese consumer loans, as a whole, the industry was growing somewhere around single digit growth for the coming years. And financials growth in terms of consumer products is expected to grow somewhere around 30%. So slightly more than 3 times of what the industry is growing. So if we extrapolate these growth rates moving forward, in the coming 5 to 10 years, we can safely assume that Ant is going to control somewhere around 1/3 of the whole China's consumer loan market. That is a massive concentrated risk for any economy. And I think that the Chinese government is aware of this. So so when that issue is being brought to the spotlight, what they have really forced Ant to do is trying to make them sort of establish a financial holding company, because for an internet company, it is supervised not by the CBIRC, which is the financial regulatory body that oversees banks, insurance, and financial institutions. So internet companies are being governed by another body. But for companies like N, when they are forced to establish a financial holding company, then it will be a very natural transition to be governed by the CBIRC, to be governed by the banking and financial regulators. So what's the indication? What's the implication here? If you are internet companies, you can easily command valuations like, I don't know, you name it, right? 50, 60, 70 times PE. But if you're a bank, just very briefly, generally speaking, you're just somewhere around like 10 times PE. So your valuations have to swing greatly. And just a quick update on Ant, if you're interested. Just last night, the CEO of Ant actually has resigned, has announced his resignation last night. So it is something that China will continue to tighten its grips. Yesterday, there's a rumor that Tencent will be the next target. But I think this is really not about specific companies. This is really not about Tencent, Baidu, Alibaba. It's really about China wanting to have the control of one of its most important economic nerves in his hands, in the right regulatory body. So yes, I do agree that Tencent, Baidu, Meituan, you name it, JD, they will have to eventually comply. They will have to eventually make adjustments to the businesses. And I think whether is this going to impact greatly on these internet companies, I think there will be impact, but I doubt that the impact is not as bad as most people feared. Why? Because Alibaba, just take Alibaba as an example. Alibaba owns 33% of Ant. Okay, it's not 100% of Ant. So if Ant's value fall, the value to Alibaba is not going to be as deep as the value lost in Ant. Similarly, for Tencent, even though that Tencent is holds completely of their financial arm, Tencent only own 30% of WeBank, which is the digital bank that is doing the financial stuff for Tencent. So the kind of valuation losses for these big internet companies are really not as bad as feared by the market. And these internet companies, they really do have their really own modes. Alibaba in e-commerce, Tencent in payment and also their online games, Baidu previously was search, and then right now it's about EVs and EVs. Meituan is about the delivery fleet. So each of them have really their own moat and business strength. So will this taper off overnight? I don't think so. Yeah.
All right, that's a very fair point because we have actually seen regulators coming in we have the antitrust and anti-monopoly system, but then they still emphasize on the innovation part, right? So the next question would be, actually we can see China have been emphasizing on Guangzhou, right? To spur their plan for smart zone. Perhaps you can share a little bit of your view on this latest development on their emphasizing on Guangzhou and also some part of the Hong Kong.
Right. I believe the question is about the Greater Bay Area, where it involves Guangzhou, Shenzhen, and Hong Kong.
Correct.
Collectively, we call it GBA, the Greater Bay Area. This is definitely a very big focus for China to create a so-called metropolitan area for China. This is one of the richest areas for China, and due to the GDP and size of these areas, they are able to spend. Okay, China, yes, is a rich country, but many will also understand that not every part of China is rich. So in order to spend, they need rich local governments to support them. So that is really one key reason why. And also, Hong Kong itself is actually still pretty important for China. Some might question, like, after all this social uprise, social chaos, will Hong Kong be cut off? I personally don't think so. I think Hong Kong is still a very integral part of China, and what could be the role of Hong Kong moving forward is really the gateway for mainland China and the international world. So to maintain the prosperity of this area and to encourage more R&Ds in these areas. So this is really the part of the economic center of China moving forward. So other than this, there are other regions as well, like what we call Jing-Jing-Ji, or Beijing, Tianjin, and Hebei area. That is also one part that China is developing. Also the Yangtze River Delta area, where Shanghai and the rest are at. So these are the key areas that China is not going to put all the eggs in one area, but it will be a few areas. But these are the focus areas where economic development and innovations will really take part. We'll see a lot more R&Ds being spent. We'll see a lot more companies coming to go listing, to take on IPOs and go listing. We'll see a lot more companies that will engage international markets, like M&As and things like that. Yeah.
Thank you, John. Thank you, John. And the next question is related very much to the disruptive technology space. And how would potential high growth sector, the disruptive type, especially in the autonomous car space, like the likes of NIO in China, XPeng, as seen, what's our view, and do we actually invest into all these disruptive names in our Affin Hwang portfolio?
Sure. Thank you very much for that question. It's a very good question because this is a key focus area of China moving forward. It plays in line with, I'm talking about NEVs, new energy vehicles here. This is very much in line with China's carbon effort. They're trying to neutralize the carbon emission. And also, so moving forward, new energy vehicle will definitely still grow. Be it NIO, be it Xiaopeng, be it Li, be it BYD, you name it. There are really so many out there. How do I see this sector right now? It is a high growth sector, yes. It's still a deeply loss-making sector, yes. It's going to burn money, yes. So the question is really, how do we value these companies? Okay, so when bond yield rose in the past 2 weeks, these companies took great hits, like how I explained, like why. Because for a high growth company, the projection or the forecast that each analyst and fund manager have to make will be much longer. We are not talking about 2020, 2025, 2030. Some we might even need to project at our best effort to 2050 and then discount them back. So this is so-called what we call long duration assets. So these are really assets that we are looking at far future and try to discount it back. Hence, when the discount factor, when the denominator changes or rise, the whole impact to the value will change dramatically. So these are really high risk, high growth sectors. But I think directionally, this is the sector to be in for China. Will it be Neo? Will it be Xiaopeng? Will it be Lee? Will it be BYD? Honestly, each of the companies have their own pros and cons. Very quick run through. Neo is very smart in their business model. They try to capitalize. They try to fix the pain points of NEV users. They try to give you services like battery as a service where you can just change your battery rather than charge your batteries. Xiaopeng is very good in their software development. Xiaopeng is very good in their autonomous driving, ADAS kind of software development. The software is one of the best among the key leaders here. Li Auto on another side will be one that's very smart to capitalize on so-called extended range EV. It's not really a real EV, but it's somewhat that they can just bypass certain things and call themselves EV. BYD itself is unique in the sense that they are one of the few that are able to make their own batteries. So Tesla is trying to make their own batteries as well, but most of us will understand that Tesla currently is still very much relying on either Panasonic or CATL. But BYD is one that is able to come up with their own batteries and is a very advanced batteries in the name of Blade batteries. So each of them does have an edge of themselves, and this is an economy that has just started booming. For us that have really understood a little bit about industry developments, but this is what we call S-curve. In all new industries, they will need to go through phases like the introduction of the technology. They have to go through phases of fierce competition. They have to go through phases of consolidation where certain companies will end up going bust or being bought over, and then the industry can mature with a few winners out there. Will it be Neo? Will it be Xiaopeng? Will it be Li? I think we are really too early to talk about this. Do bear in mind that even the incumbents like Volkswagen, like Volvo, Mercedes, BMW, these guys are really going in big for EVs as well. So it's not an uncontended industry. It is going to be a very fierce battleground. So these companies do possess very big risks.
Thank you, John. We can still, I think we still have another 5 more minutes to go. We still can answer, I believe, 2 more questions. So if you have any more questions, feel free to leave it in the Q&A chat box. And the next question would be, after addressing so much about the regulatory pressure in the fintech space, in the e-commerce space, and the question will bring back to rotation play, and we can actually see that light is at the end of the tunnel for this global pandemic. What's your view on whether should investors actually lighten up more on the technology sectors and switch their preference towards the banking and insurance sector at the moment?
Sure. Thank you for that question. It is something that we ask ourselves every day as well. The truth is that rotational plays has taken part a few times in the past year. And sometimes rotation plays survive probably in 2-3 weeks. Sometimes it can go on 2 months, 3 months. At this point of time, we think that the wisest thing to do is really what we call barbell. In Affin Hwang, our portfolios are generally adopting this barbell strategy where we have our core holdings in stocks that we believe possess structural growth angles. So things that we believe, companies that we believe that will ride through economy up and down cycles. But at this point of time as well, we acknowledge and we understand that the world economy is undergoing a recovering phase post-pandemic. So most major economies, unlike China, are still struggling and as just at the start of the recovery, given that the vaccine rollout has just gone underway. So with this part, cyclicals play like the ones that you mentioned, banks, things like that. So this would definitely benefit from economic recovery. These are what we call cyclical sensitive stocks. So with a barbell strategy, we will keep our core holdings, sort of half or more than half or 2/3 of our portfolios in this kind of stocks that has really good structural growth prospects, but we will also carry on a heavier weight in terms of cyclical stocks to benefit and ride on these cyclical stocks as well. So it's really not too wise to just go one-sided and keep let's say I'll go 90% in internet stocks or any high growth stocks. That is really too much risk to carry in a portfolio. Yeah.
Thank you, John. And we can still have another 2 more questions. Given a lot of people are saying that Chinese market is actually very expensive, and they have recently saw a sell down in the expensive consumer staples name like the names of Moutai. Will you actually encourage the investors who are already investing into this, the funds that have majority in this consumer staples name, and stay invested for maybe another 3 to 5 years, knowing that China will continue to grow at the current pace right now?
Sure. I think I need to mention that it will be very irresponsible for me to give any specific recommendations on any specific stocks here in this platform, because buying a stock is making money from a stock is really when to buy and when to sell. So if I ask you to buy now, I won't be able to tell you when to sell it, right? So it's very irresponsible for me to give you recommendation on specific stocks. But like I mentioned in my presentation just now, consumer sector is still one that we have high regards of, especially those leaders in the market. So I think when you are thinking about investing in consumer stocks, there are 2 ways to look at it. There are certain kinds of products where your supply will never satisfy demand. Okay, there are certain kinds of product, like the one that you mentioned just now, Moutai. The production capacity is capped. You can't produce Moutai as you like it, because you need to keep it for 4 or 5 years before it can be continue to process it into the Moutai that we know it. So demand for such products will continue to outright supply. So these are really not just Moutai. There are other businesses that possess such characteristics as well. These are really good companies that we think will not die off. That will really ride through and continue to grow, because it's just as simple as demand and supply as most of us know it. There are certain kinds of products in the consumer sector where demand and supply are really not that as attractive. Like for example, there are certain things like food, snacks that really the leader is only commanding like less than 1% of market share. Like these are really sectors that you have to spend heavily on sales and marketing expenses in order to grab attention from consumers. And these are typically things that don't really command too high loyalty among consumers. So these are really sectors that it can still make money in certain period of times, but it would be something that takes a lot more effort to follow and to follow and invest in. So there are 2 kinds of consumer stocks that I would like to propose. And also there are another basket of consumer stocks. You can see it as pharmaceutical related, healthcare related consumption. So that is another one that I think that is quite interesting, because in China right now, aging population is an issue. But with aging population, these so-called aged people are ones with have spending power as well. So consuming healthcare services, consuming healthcare product is something that we think that will be positive in the coming years as well.
Thank you so much, John. I think that's all we have for today's question. And thanks for joining in, and thanks a lot for your insights. If you find this session valuable and you would like to know more about some of our funds that is actually investing into China and other Asia ex-Japan region, feel free to reach out to your account manager and they will brief you accordingly. Again, thank you for listening, and we hope that this session was fruitful. It's a pleasure for emceeing for you all for today. This is Ken signing off. Enjoy your weekend, and more importantly, stay healthy and stay safe, everyone. Bye-bye.
哦，不好意思。
没有关系，没有关系。
是对着看你啊，OK，可以。
我叫张淑瑞，就是舒服的舒，睿智的睿。我今年12岁。
我今年20岁，读着degree in mass communication。
改天要读什么课啊？好像读那种电脑的那种电脑。
Further study， 其实我想过要 further 去 master， 然后可是还在看看啊，因为我现在毕竟还在 degree year 3这样子，我一直以来都很有兴趣在拍摄啊、剪辑方面。
可能我会当一个 pharmacist， 但是也很难讲。因为我也是有考虑想要当一个 chemical engineer。我现在没有想到，因为我很想要做很多的东西，要好像做 footballer、IT、YouTuber、streamer 这样。没有特别大的想要出国的志愿。要出国读书肯定要。
有。
然后为什么最后没有去呢？
经济不好。
经济不好。
对，家里经济。我没有太勉强，一定要去外国读书啦。但是如果能的话，当然是好啦，因为我也是想要去 experience 一下这样。我现在的话会有一定的难度啊。
拿了一个比较好的成绩，然后拿奖学金才可以读书。所以出国读书这种东西就会比较遥远一点，除非我是只能拿到很好的成绩，然后可以出国读书。
至少1年要100多千吧，没有记错。
100千以上，很贵很贵，可能要几百万。我觉得妈咪是不 OK 的啦，看我好像16、17岁，可不可以自己赚钱先存钱？
不打。机会不大。
现在就是那个经济条件不是这样可以 afford 得到，所以就我大姐之后就比较困难了一点。
我觉得多少都会很辛苦一下，如果是供我的哥哥还有我。
因為我自己喺事業上嘅差落，變開就影響到我嘅收入好大。
之前他有一笔 saving 的，就是他0岁开始的时候买到他8岁，就是1年240千。过后你10年没有拿到，他18岁他有一笔钱，可是那时就是他爸爸的公司不好，就拿完出来了，就浪费了那筆
負擔當然是有咯，或者佢知道屋企經濟係冇可能供佢去外國讀書嘅，所以佢不嬲都唔敢有呢個念頭。那麼我兒子已經是出來做工了嘛，我也會跟他的哥哥商量，我們這3個人來解決這一方面的問題。
關於讀書，如果他真的可以的話啦，像我們做父母一定會想辦法去幫他們完成他們的學業那些咯。
只需要他們身體健康就好了啦，那種金錢的方面就不用太什麼啦。
他們也辛苦了。
對。
Just try your best, OK？ 做到最好，得唔得冇所謂 ，OK？
你到大咧，我們都是好朋友，你開心不開心都要跟我講，不要什麼都收在心裡面。
就有什麼跟你講啊？
賺多點錢嘛。